Okay, in this video, I'm going to talk about the effect of transactions on the accounting equation. This is a question that you would get in grade 8, grade 9, grade 10. It's a very common question where you look at how a transaction affects the accounting equation. So in doing so, you need to take note that the first thing that you need to look at is to come up with the two accounts affected, right? That's the first thing that you need to do. So you need to identify the two accounts that are affected by the transaction. Number two, you also need to classify those accounts into one of these categories. Is it an asset? Is it owner's equity? Or is it a liability? Right? So you remember from the previous video, this is current and non-current assets. This is made up of capital, drawings, income, and expenses. And then this one is current and non-current. Right? This one is current and non-current. Okay, so you need to know which two accounts are affected, in what way are they affected. So I will always be coming back to the things that we have done before in order to explain that. So now you can get maybe an answer book like that where you need to look at the effects of transactions on the accounting equation. So I'm going to start with what is circled in black there. Your accounting equation. So if you look at 4.2.1, it says sold goods for cash at 12,250. The cost price was 11,400. Sold goods. So the critical thing there is that the goods were sold, and then this is the selling price, and then this is the cost price of the goods. And that portion of the question had about 8 marks. Why is that so? Now, you need to remember that every time you deal with a sales transaction, you are going to record the sale, which is the selling price. You're going to record the cost, which is the what? Which is the cost price. So transactions involving sales will always have two. That is the sales and then the cost price. So according to this question here, goods were sold for cash. So when you come to your answer book, whenever goods are sold for cash, this is the first transaction. When goods are sold for cash, money must go to the CRJ, which is your cash receipts journal, and then you need to look at what I've mentioned here. I said you need to check which two accounts are affected by that. So if you sell for cash, obviously, you know the bank comes into the picture because money is going to go to the bank, and then you've got your sales because this is a sale. So your two accounts affected is your bank and your sales. But in what way? So the bank, when a sale is done, money comes into the bank, which is a positive, and we know from the previous accounting equation that assets increase on the debit side, which means my debit here is going to be the bank, and then I credit sales. Now, bank is an asset, and bank is receiving money, so there's going to be a plus 12,250. So it will be plus 12,250. And then now sales, it's income. And when you sell, your income increases, which means, and we also know that income increases owner's equity. So there's also going to be an increase of 12,250, and nothing happens in your liability. But remember, like I mentioned there, that whenever you have a sale, you must also record cost of sales. So the second transaction is going to involve two other accounts. Because when you sell, in this case, the first transaction is bank and sales. The second one is that when you sell stock. So you're obviously going to lose an asset called trading stock, and then you're going to create an expense called cost of sales. So what it means is that when I come to my ledger, what is happening is that the trading stock is going down because I'm selling the stock. So when I sell the stock must decrease, and assets decrease on the credit side, which means in that case, this side, that's where I have trading stock. Automatically, it means my cost of sales is on the debit side. Now, cost of sales is treated as an expense, and when expenses increase, they increase on the debit side, but they reduce owner's equity, and in this case it's 11,400. So your owner's equity is going to decrease by 11,400. Your assets is also decreasing by 11,400. Why? Because stock has been sold, so assets must go down. Cost of sales, we've sold stock, so that creates a cost there, that creates an expense there, which reduces your owner's equity. So whenever you've got a transaction involving a sale, it means that you have to debit the bank, which is an asset, credit your sales with the selling price. And then because you're selling stock, you also need to get rid of that stock from your books, which means you debit cost of sales, credit trading stock, which is a minus here. Now, and then the last transaction on this video is going to be the second one. It says repaid a portion of the loan. Repaid, right? When you pay, you're no longer using the CRJ, using the CPJ. So you repaid a portion of the loan to ABA Bank, which was 5,720. So what you do, firstly, you are repaying. So when you repay a loan, the bank is obviously involved. What am I paying? I'm paying a loan. The loan is from ABA Bank. Okay, so those are my two accounts. So how then do I know what to debit and what to credit? Remember, bank is paying and assets decrease on the credit side. So which means with this second transaction here, I'm going to use my CPJ because I'm making a payment, but the bank is decreasing, which means my loan goes to the debit side, ABA Bank. Okay, and you pay, it was bank is an asset, so you're going to have 5,720 there. Loan is a liability, you're going to have 5,720. But the question is, what is happening when the bank makes a payment? It's a minus. When the loan is being paid, it's also a minus. Your liabilities go down. So what are we saying? We used the bank to pay the loan, and bank is an asset, and assets decrease on the credit side. That's why the bank is on the credit side. Liability, loan is a liability, and liabilities increase on the credit side and decrease on the debit side. This liability is decreasing because we are paying the loan. When the loan is being paid, the loan has to go down. So what tip can I give you? The tip that I can give you is that as long as whatever you are dealing with involves the bank is the easier one to manipulate, is the easier one to deal with. What am I saying? Remember, when your transaction involves the bank, you always know that bank is an asset, right? And bank is going to increase on the debit side, it's going to decrease on the credit side. So whenever you look at a transaction, you look at what happened to the bank. If you understand what happened to the bank, then you know where the bank is being posted, whether it's on the debit or on the credit side. Maybe before I finish off this video, let me just show you using one more transaction in order for me to show you the effect, the use of the bank. So if you look at transaction number, I'm going to show you transaction number 1, this one, this transaction here. It says the owner, Mr. Nams, increased his capital contribution to 280 via an EFT into the business bank account. So if you check on the previous information here, this business already had capital of 215. So the capital that was already there was 215, and then they said it was increased to 280,000. It was increased to 280,000. So what it means is that the first thing that you're going to do is that we didn't receive 280 into the bank, we didn't receive 215, but we received the difference between the two. So you can start by getting the difference between the two, which you guys can use a calculator, right? And this gives you 5, this gives you 6, which is 65. So it increased by 65. So technically we are saying in our bank account we received 20,000. So when you're doing your double entry, what do? The first thing that you need to do is that the two accounts affected is going to be the bank, right? And it's going to be capital. But let's say I do not know what to debit and what to credit. I gave you a tip, look at the bank. So when capital has been increased, what happens to your bank? the bank will increase. The moment you know the bank will increase, you know the bank is an asset, it increases on the debit side. It means this is going to be my bank. So automatically your capital becomes the other entry. And because it goes to the bank, this is CRJ. So the bank is receiving money, so it's plus 265. Capital is increasing because it was increased from 215 to 280. Capital is also increasing, and there is nothing that happens under your liabilities. I can make a lot of examples of this. Okay, let me give you another example. Let's say you bought a vehicle. From McCarthy Toyota, right? And you paid, the vehicle was 250,000. Okay, so if you paid 250,000 for the vehicle, the first thing is which accounts are affected. You're going to have the bank, because it's going to pay money. Then you're going to have your motor vehicles, because the vehicle has been bought. So what do? When you go to your double entry, let's say I don't know what to debit and what to credit, but my life has been made easy because there's a bank. So the bank is making a payment. So when the bank makes a payment, it goes down. So it means bank is on the credit side, and then this becomes my vehicles. This is because you made a payment, so that's CPJ. Now, but what is happening? Bank is an asset, it's going down. But vehicle is also an asset. We did not have a vehicle, now we have one. So assets, the vehicle is increasing, the bank is decreasing, but both of them are assets. So I'm going to have a plus 250,000 and a minus 250,000. Okay, that's one way of writing it. Alternatively, if you don't want to write it that way, you can say plus and minus 250,000, or you can say plus 250 minus 250, or you can say plus and minus 250,000. That's what you do. So the bank makes it easy. Check what happened to the bank, because if you understand what happened to the bank, then it becomes easier for you.